Hello. What's up, everybody? What's everybody doing today, y'all? Good morning. All right, let's see. We got Jose in the chat. We got Manny in the chat. We got Ness in the chat. Yo, we are lit today, yo. Let's go, man. Let's go, yo. We are lit. Where the rest of the guys at? All right, let's get these charts ready, man. Let's get these charts ready. Market looks like it might spike up. Yep. Later, I would like to know more about futures. All right, we can talk about that. We can talk about that for sure. We got 1 minute until market opens. Let's go over support and resistance real quick. Okay, so here we have a market that is trending upwards. Okay, so if we're trending upwards, we have a previous high here, high of day. More like right there. All right, so we have resistance up above. If we continue going higher, okay, we know this is a fair value gap on the 1 hour time frame. Let's go ahead and take that off. We kind of tapped into it a little bit. All right, market's bullish at open. What up? Good morning, Lenny. What's up, man? There's a possibility we could go up to this level here. But I'm going to wait today. I'm going to wait for the first at least 10 to 15 minutes before I take a trade today. This could be a good buy opportunity, but I'm too far away from support. This is the nearest support right here. So if I buy this market, I'm too far away from my protection, from my, you know what I'm saying, for my stop loss. So I would rather wait for another opportunity. I just let that go. Let's check out the higher time frame. Who here checks out the higher time frames? I'd like to know that. I feel like a lot of people don't really pay attention to the higher time frames, and you tend to miss opportunities because of that. But the higher time frames are key, yo. They're very key. You get those key levels. Get those key levels, right? You can see here on the hourly time frame, we have resistance right here, and price has rejected off this level multiple times. So it did it here, did it three times here. 1, 2, 3. 3 times here, 4th time here. It pushed above, very high above that line, but it's still closed below. So this is still a resistance level that's pretty strong. Until we close above that level, then I wouldn't be looking to buy this market unless we have strong bulls close below above this level here. Let's call that let's put this orange, we'll call that a key level, right? We have a key level here. Okay, we got support down here. You got another support right here. But if we do go higher, we have the supply zone up here where sellers, right? If price breaks out of this key level, price can continue to trend in the upward direction and give us higher highs and higher lows until we tap here. Then I would look for the reversal. All right, what else do we have here, y'all? What else can we see here? Can you guys tell what this is right here? See how clear the candles look going up, and then once we get to this candle right here, we start getting these long wicks on these candles. So we have a range, we have a consolidation right here. Price is just going sideways here. So we have a range, maybe something like this. So price will go from one end to the range to the other end of the range to the other end of the range to the other end of the range until it eventually breaks out off the top or the bottom of the range. And then take a look here at the news we have today at 10 a.m. factory orders and jolts. So we'll keep that in mind for the 10 a.m. and jolts. Might wait till 10 a.m. first to take. Sometimes it's good to wait till the news comes out first, so that you don't get caught up on some weird market freaking swings and shit. Okay, it also looks like right here we may have a trend line. Alrighty. Alright, so I think that's good enough. That's the daily time frame. This is the hourly. Okay, so what can we see here? Trending. We got this real long wick right here. We have a bearish fair value gap. Okay, so this is probably, I think this has a chance to come down here, take out these lows, and then look for the move higher here. this could also be a play here. This could also be a play. So first, what we need to know is buyers need to be strong above this key level. If we want to buy this market, buyers need to be strong here. They're not there yet. They're not there yet. So far they're weak. So if this market is gonna come down here for us to sweep this low, then we need to see strong sellers. Still there, be careful. We're about to see what's going on here. First candlestick is bearish on the 5-minute. This is a 5-minute time frame, and this is the QQQs. Same thing on the NQ. Same, practically same candlestick. Oh, hold on. I accidentally there we go. Took the Qs out of there. So candle sellers, we're coming down right now so far. First two candlesticks looks like sellers are in control. We have support right here. It's just a waiting game right now. We need to have more candlesticks, more structure in the market to know whether this is going up or down. Right. If I had to just take a guess, I would be on the short side because we have a bearish fair value gap up here. So like if I had to just guess without waiting for more candlesticks, I would probably play it short. Because if you look here, this is starting to look like a double top. This is starting to look like a double top. And we have a bearish fair value gap above. So if it looks like a double top, bearish fair value gap above, I would be leaning a little bit bearish. And because of these two candlesticks here, so the best thing right now is just hang on a little bit longer. Hang on, hang on. All right, it's 9:42. We just about have our 15-minute range. Mark this. Let's see what we get here. Let's see. I'm gonna go ahead and mark that 15-minute range high. It's gonna be the range high. Oh. Range high, range low. If we do break below this support and below this range low, let's say we crack this support right here. We crack it very hard, right? We get strong sellers. Very strong sell. It has to be very strong because this is a very bullish kind of trend here. So this could then move down. Let's see. Come down in here. With potential to go lower. Oh snap, Nicole's in the building, yo. We got everybody here today. Shit, who's missing, yo? Tell them to wake the fuck up. We got some money to make, man. We got some money to make. Alright, so this last candle here, we had some buyers stepping in, closing above the previous day close. And we had a little bit of a spike in volume here as well, on the buy side. If we close above this candle right here, we could be looking for some kind of, if we close above it, right, so push above it, close, we could pull back and finish filling this gap up right here. Let's see. All right, buyers are pushing. All right, we gained that strong close above. Now there's a possibility. Let's see how much time till that candle closes. About 2 minutes. Let's see. Well, we could see that pullback. Neither got it right now. All right, all right. Let's take a look. Oh yeah, Nvidia's ripping. Nvidia's ripping right now, dude. Nvidia is ripping, dude. What up? I'm not feeling this song real quick. You gotta change this out real quick. Hold on. All right. We're still waiting here to see a good setup here today. We need a solid setup. All right, that's that pullback. That's that pullback into this bullish for rally gap. I kind of don't like this buy setup though, because we didn't close above the range. And we didn't close above this candle high either. So this could be a fake move to the upside. Look at how long these wicks are over here on the Qs, on the NQ here on the 15-minute time frame. All right, does that look like it's, should be going up? What that looks like, right, is basically what we're seeing here, double top. Right? The market pushing twice and failing to go higher than this area right here. Same thing that we're seeing here. Two pushes, right? We pushed here, failed to go higher, pushed here, we're failing to go higher. It's not looking too good. But this could be a low. It's not an A+ setup, but it's a possibility could work out. Take a, very low, couple micros or something like that, 1 or 2. 1 to 2 or something like that. Just a little scalp. Yeah, same here. I haven't taken no trades. No trades yet. Just looking at price action. Not too convinced that this is gonna go higher. But if we close above this opening range, yeah, then this would be like the ideal entry down here. And then if it closes above the range, then you can maybe add a couple more. This would be one of those trades where if I took this trade, I would quickly move it into break even quickly. And I would quickly move down to break even. Just to be safe, you know, because like I said, we're sort of rejecting previous, going higher than previous day highs. So let's see. We never know. We never know. So far, it's looking good. It's playing out. All right, we close higher. We close higher than this candle high right here. We close higher. This candle high. Strong bulls. Little bit low volume though. Ready? So far, the bulls are in control. We had a break of this. We had a break of this high, a pullback, and a retest. So this is looking very bullish right now. It's a difference right now than what it was a few minutes ago when it just looked like two long wick candles. It was a difference then than it is now. So now you have the body of the candle all the way up here after the pullback and the retest. So this is actually very bullish price action right here. So this could actually play out. This could actually play out. Now, what happens if we get this candle close above the range, and then immediately you get this massive freaking sell-off, right? If something like this happen, where we close above, and then immediately strong sellers jump in the market, I would immediately close that trade, because we do have uh seller an imbalance here, and we have a bearish for rally gap. We have a supply zone up here, and these are areas where it can be very sudden when it can go from bullish to bearish. It can be very sudden, that switch in these zones. It's happening to the buyer. Looking weak there. Getting an increase in volume. Volume's picking up. This could pull back again and still go higher, by the way. This can still pull back and push higher. She's going. Alright, it's 10 a.m. 10 a.m. The news is out. Let's see how the market takes it. There she is, yo. Would it have worked out? Let's see. Would it have worked out? Oh yeah, it would have played out. 1 or 2. That trade would have played out. Actually, I would have probably put my stop down here. Let's see. I want to see if it would have played out. She's shooting up. Could be going all the way up here. So this could be more like something like this. 1 to 3 risk reward on that one. 1 to 3. Good morning, good morning. Yeah, so what gave it away here, it was this really this break and retest. This break and retest here. If this was going to fail, it would have done something more like this. It would have broken out and then maybe turned like this, right? But as we broke out, we had this fair value gap here. We had this fair value gap right here. Right? And this is that fair value gap right there. You guys been keeping the same pattern for the past 3 weeks? Dang, past 3 weeks. I don't know about the exactly same, but because the market's condition can change from like, you know, from time to time. So it can be real choppy for like 5 minutes, and then the next thing you know, that thing is just going in a straight line. So market conditions tend to change pretty rapidly. For example, if you look up here, we had this huge move up, then we had this big drop, and then it's just chopped around here for a long time, right? And then shoots down, shoots up, comes down here, and then chops around again, chop, 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 chop. So market conditions always tend to change very quickly, which is why you have to have patience in this game, because if you're trying to trade and the market conditions aren't good, then the cases are you're most likely going to lose money. So it's better just to sit out, which is what I prefer to do, is to sit out when the market's choppy. I'd rather find something else to do with my time and then come back later once the market's trading in a nice, smooth direction. Okay, buyers are getting weaker up here. See weakness from the buyers. So we could get a pullback as long as this low is a higher low. So as long as this pullback isn't too deep. As long as this pullback stays either above here or here, we should be good. Now, if it comes all the way down here, then yeah, I don't know about that. Do we prefer it to stay above the 15-minute opening range? Maybe pull back and retest here and then push. Now, if we close below it, then I wouldn't put too much confidence on this move higher here. All right, so this is how you can tell that pullback was coming, right? If you see buyers breaking out, and then you see these candlesticks getting so small, it's telling you that the the strength of this breakout higher, right, is losing strength, it's losing momentum, and the candlesticks are getting smaller and smaller, and then until the change happens, the change in direction. So this would be a trade where if you did take it, you would move, like I said earlier, you would move your stop to break even just to be safe. Or if you did take profit up here, then you would have been golden. And you're willing to take profit in any trade at any moment. You just wanna not try to stay too long until the move then, you know, tends to fail or turn around on you. Alright, it's not looking too good for the buyers. The support's holding up though, so the support right here is holding up. So try to notice, like, wherever you put your stop loss, right? Wherever you put your stop loss, when you take an entry. Okay. Let's say I did take that that 5-minute fair value gap as an entry right here. I want to talk about this real quick because this is important. So where would you put your stop loss? If you was taking this setup, where would you put your stop loss? Will you put it right here inside the fair value gap? Will you put it right below this candle here? Would you put it below this demand zone right here? Can anybody here tell me where would you put your stop? Where would be a good spot to put your stop in here? What price? How much should you risk? Where should your risk limit be? Anybody want to take a chance? They don't want to take a crack at it? For me, the stop loss would go, I had taken this entry, my stop loss would go at least below this candle, right? The candle that created the fair value gap, which was this long candle. 523.90. 523.90 all the way out here. Oh, so you would put your stop. Well, that's where we would take the entry, because we would put this, we would have the fair value gap right here. Let me see. So the way this entry works is, right, you would mark your fair value gap. This is the first fair value gap of the day on the 5-minute time frame. And the way this strategy would play out is you would put your entry, you will go long as soon as price taps into it, or you could put it in the middle of that fair value gap. But what happens if you put it in the middle, sometimes it's not gonna get you in on that plate. You're gonna miss the opportunity. So if you put it in the beginning, yeah, you applying, you're gonna have a little bit more risk, but you're gonna guarantee you get in on the play and not miss it out. So my entry, the entry would be tapping into that fair value gap. That would be the entry. And then the stop would be at the low of the candle that created this fair value gap. So it's this long green candle here that created this inefficiency. So you would want to be at the, your stop would want to be at least at the low of that candle. And then you can do a 1 to 2 from there. You would do 1 to 2 risk reward. So that's what you would take profit. And then this is a way where, all right, if I take this trade, I can go ahead and put my limit order. Yeah, I can put my stop order right here, right at these lows. And I can put my take profit order right here. And I can just leave the screen. I can leave the computer. I can leave the house. I can go to the gym. I can do grocery. I can do whatever. I can just leave. Like once I take the trade, you should be able to put your stop and you should be able to put your take profit levels and leave it unattended. You should have that kind of confidence that not that it needs to play out, but you should have that kind of confidence in your strategy. If you practice it long enough, then, you know, of course, yes, sometimes you can move it. Like I said, you can move your stop to break even, which is fine. But you're not always forced to be glued to the screen to be able to trade. There's people who take their trades in the morning and they don't trade the rest of the day. You know, they'll take 5 minutes, pull up the phone, set their trades, and that's it. And they'll go on about their life. Not looking at the charts. They're not aware of the candles. Which is a different way of doing, you know, taking these trades and managing your position. But I also noticed from my experience, it's so stress-free, yo. It's so stress-free. It's so nice to be able to just put in your trade and walk away, and then you come back. It's either you lost or you won, but you're not glued to the screen and being having your emotions manipulated by the market, because that's what the market is doing. Every time it comes up, it goes down, it goes up. It gets your hopes up. Oh snap, I'm gonna make a lot of money. Then it comes down and you're like, oh shit, I'm about to take a loss. And then like, all right, we'll back up. We're gonna make some money. So like your emotions are freaking off the charts. You're going crazy, and you know the hormones are probably like, what the hell's going on? Like, are we happy or are we sad? Are we pissed off? So this is a good way to set it, take my entry there, set my stop at however many points, $2, $1, 2 point, or whatever points in the futures, dollars on the stocks. You can make money in an hour and we're good for the day. That's right. I'm still watching, ask questions. Yup. Ask your questions, yo. I would be asking, yo, have I had this opportunity? Yo, I would have like a whole list. I would have a whole list of fucking questions. Because this is all shit. I didn't know none of this. I had to figure this shit out solo, yo. Shit's hard, yo. On your own? Holy shit, dude. It's a whole different experience. Let's just say that. Like, how long should I hang on when I take a trade? How long should I hang on to my trade? How do I determine where I need to cut my losses or whether I need to continue holding? Those are things that it just takes time to build, but it also helps if you have somebody kind of give you some knowledge to go off of, and then decide whether, okay, this trade's not working out. I need to close it, or no, it's still in play. We can still work this out. I started learning, it was around 2020, 2021. I think it was like 2021 when I started learning. It was like a little bit after COVID. started. Discipline is hard as fuck. Yeah, that's 130% right. Having discipline to stick to your plan, stick to your strategy is very, it takes a lot of patience, because we have to sit here and do nothing. You have to sit in front of the screen. You have to not only sit here, but you have to sit here and be manipulated by the market, and have the discipline to tell the market, like, yo, I'm not taking this shitty ass trade. This is not what I'm looking for, right? Pretend like the market's a person. That person's giving you like drugs or something. Like, hey man, take this shit. Take it. It's just one little bit. It's just, it's just to take the edge off of something, and then you're like, yeah, it's just one time. That's what the market's doing. It's baiting you to continue taking these shit trades when the market might be choppy or the direction's not clear, right? And you have to have that discipline to be like, you know what? I don't drink, I don't smoke, I don't do this, I don't do that, so I'm staying out. I'm good. Speaking on that topic, when do you know to pull out or keep holding? Right. All right. So pulling out. So keep holding. You have to have some kind of knowledge on market structure. So for instance, right, because it's gonna vary, depend on the strategy that you use and what type of market that you like to trade. So some people like to trade trends, right? So we have trends, right? This is a trend. Market's trending. It's going up, right? And it's creating higher highs. And it's creating higher highs, right? These are the highs. These are the lows. So it's creating higher highs and higher lows. This is an uptrend, right? So when you're trading a trend, you want to look to buy at the lows, right? Whenever you see a low, you want to look to buy it, right? And you want to be looking to sell out of that buy position at the high. So let's say you bought here, you could take profit here. Or let's say you didn't buy this opportunity, you can buy here and you can sell here. Right? So just like we did here, market's trending up. We was looking to buy here as the market pulled back. And I said, okay, market could go up. So we're buying this low as the market's trending higher. We're buying the low. So if you're buying the low, if you're buying down here, if you're entering the market and buying your contract when price is down here, you would then want to have a trade. Let me clear this up real quick. You would want your trade to look more like this, right? You want to have your entry somewhere down here, right? As soon as you get confirmation that it's going up, and then you would want to have your stop below this last low. This is if the market's trending, of course. This is if it's trending in the upward direction, of course. So then you would do, okay, I would want to take, when I take a trade, I want to at least, let's say I'm risking $100, I would want to take profit of $100 as well. So we call that a 1-to-1 ratio. Right? This is the least you should be looking for. Because if you're risking $100 to make $10, right? Let's say this is your profit and this is your risk below it, then you're taking an awful lot of risk to make a little bit of money. So it's in that case, it's not really worth it, right? It's better to wait for another opportunity that could potentially give you more profit. And the way I would break that down is, okay, let's say for instance, okay, all right, let's say now I decide, all right, I want to buy this market's going up. But now I know we have sellers right here at the supply zone. So if I buy all the way up here, my potential reward, right? Because I don't know if the market's gonna go like, you're just never gonna know for sure. you're gonna have an idea that the market has a high probability chance to get to your take profit level. But if in case it does get here, right, the chances of price going down here are pretty big. So my potential profit, if I buy up here, would be very small profit. Right? I would maybe have to do a 1-to-1. I wouldn't be hoping for 1-to-2 or 1-to-3 when I know there's a lot of sellers in an upcoming price. Like, let's say this is a car, right? And the cars are selling at, let's say this is 21,600, and they're selling like crazy, right? If you have a car that's selling like crazy at a certain price, and now that price goes up and it doesn't sell as much, and then when that price comes back down to that same area, you should expect, right, price to sell at the same, volume that it sold before or similar. So this is what a demand zone is where previously there was a lot of selling there. So if price gets up here, I wouldn't be hoping to take profits further than this supply zone. So that would limit my hopes for how much profit I could get, and thus would limit also the amount of risk that I could take. So I wouldn't want to take more than, you know what I'm saying? You wouldn't want this much risk and then this much profit. I don't know if that makes sense, but it's just like, it's a little tough to understand at first, but it's basically, you got to look at your potential. What's the potential price to go higher? And if it does go higher, how much higher will it go? That's what I'm talking about. Say, beginners when you recommend books or I recommend mostly videos when it comes to technical analysis and stuff like that, just technical things like the charts and stuff like that. There could be some goods for psychology. I can give you a book here. There's Market Wizards, but honestly, I don't really like that book because it's a whole lot of yapping. Like, it's just a whole lot of, like, it's traders being interviewed and they're not really giving you sauce. It's like they're talking about just dumb shit. Just don't read that book. I'm telling you right now. I don't know why people praise that book, but I was reading it and I was just like, you know what, that book is doesn't live up to the hype. But I'm gonna give you one right now. So that was Market Wizards. Yeah, don't get that one, dude. I would do Trading in the Zone by Mark Douglas. I'll type it here in the chat so you have it. Trading in the Zone. Trading in the Zone by Mark Douglas. Yeah, that's a pretty solid book. It doesn't really it mostly touches up psychology, trading psychology. It goes a little bit into technical analysis towards the end of the book, but it's overall a good book to read. You need a book, you have the secret sauce right here. That's facts, yo. Nah, for real. For real. Yes, sir. So I would recommend you guys oh shit, no way. Go play sport. Yo, that's crazy. She need to hop on, yo, for real. Right after this session. But yeah, I recommend, like, if you want to be more aware of where to put your stop loss or how long to hang on to your trade, I would recommend that you go over market structure. and the market structure will help you understand a little bit more about, you know, how you should hang on to your trades. Because the way that this market moves is just like what do you call it? It's just like levels, right? It's just like going up a floor. So like if you're trending up, these are like floors. Right? And you have the first floor, second floor. So that's another thing. So if you understand market structure, you would know, okay, if this floor doesn't hold, if this support doesn't hold, then I'm out to trade, right? The price is here and then closes below, breaks that support, then you can get out of that buy. If you take a buy here, right? You can see, oh snap, we broke support. I'm out to trade. You can close it. That's also another way that you can know when to close that trade. Or even more simpler, right? If you use the 21 moving average, right? If you look at this purple line, let me hide all this stuff here real quick, because I'm giving you some sauce right now, bro. You need to type this in the books or something. So notice this 21 EMA, right? This purple line. This purple line is showing me the short-term trend. And as long as price holds, right, above this line, you can continue to hold your trade. Once this line is cracked by price, cracks it, you can close your trade. Okay? You can close your trade. Let's say you sold here. Right? Let's say you sold here. And you're like, all right, I got my stop. Took my entry at this this super like bearish candle right here. You got your stop over here at the high of that move. You're expecting a big move down. Okay, so you can hold your trade as long as we stay below this 21 EMA. That's one way. Or you can grab your stop loss. Right? Let's say this is your stop loss right here. And let's say this is your stop loss. And you're on this trade. As price goes down, you can follow based on the structure, right? Based on the floors. If we go down to the next floor, you can bring down your stop. You go down to the next floor, you could bring down your stop until that floor, or that, you know, in this case, this ceiling, this resistance is broken. Then you can take your exit. You can close that trade. That's two ways. So you can use the EMA to tell you when to get out, or you could use market structure to tell you to get out. What else, Chief? You're retired. What does that even mean? When it comes to Fortnite, you can't retire yet. You're cooking right now. Yes, sir, man. That's right, y'all. This stuff, man. All this stuff is valid stuff, man. It all repeats itself. It all repeats itself. Let me clear this chart up real quick. There we go. So this is where we, let's say, hypothetically went long. And we're trying to see if this worked out. One, two, two. It got pretty damn close. This market's getting choppy again here. It's 10:32. I don't know why it's choppy right now, but usually I like the market before Trump started kind of like fucking shit up, because we would get a nice price action from 9:30 to about 11 o'clock, and then the market would chop and it would turn to shit. But now 10 o'clock, 10:30, now the market tends to range, and then it wants to move later in the afternoon around 11:30 to noon. But this choppiness, man, it's just the worst. It's the worst. So watch this candle right here. These candles, like this one, we have it gives us a range here. Right? So price goes up, comes down, and kind of closes near the middle. So it looks like a doji almost. And then it did it again here. So these candlesticks are very, very kind of like choppy, right? It's not really giving you a direction, right? It's giving you a range, but it's not giving you a clear direction where the market's going up or down. Then we close above this range of this candlestick, and then it does it again here, same candlestick. And then we get another bullish candle, and it's also like, you see, so it's going up, but it's not really strong. Like, I can't say this move is very strong. So this could be something that you look for when you're trading. You could be paying attention or being aware to looking for strong trends or just moves that have, high volume, strong candles, clear direction. Even if you look here, right? Say you look here, in particularly this little group of candles right here. Look at it, just looks like chop, right? Candlesticks. I mean, you see this wicks, all these kind of wicks. Like, it's just so choppy. It's so choppy. It's moving, yeah, it's moving, it's going up, but it's so choppy, like I really don't like trading when price actions is like that. I would much rather stay out, wait till the afternoon or wait till the next day, but if you pay attention, man, these candlesticks tell you a lot. They can tell you momentum, they can tell you volume based on size. They can tell you a lot based on how that candlestick closes. So if you pay attention to these, if you learn these candlesticks, man, you're gonna be able to not just take good trades, but also avoid getting in on chop like this. That's a very key point in trading. It's avoiding the chop. If you can stay away from this chop, then I tell you right now, man, it's gonna be a whole lot easier for you to make money in this market. Just by simply staying away, not trading during the chop. Candlesticks are key. Might be a dumb time, but nah, hell no. Candlesticks are very important for everyone, professionals or newbies. You gotta know your candlesticks. How do you know prices go up or down without knowing candlesticks and structure? I wouldn't be able to call anything. How do I tell you if it's going up or down, you know? I wouldn't be able to tell you. I would at least you would have to at least know market structure. If you don't know the candlesticks, you gotta be at least a beast on market structure. So just off market structure, you should be able to. Just that alone, you should be able to know what to do. But the candlesticks kind of help with the timing, right? The timing of, okay, now is the time when I jump in on the trade. Like that's the candlestick giving me the timing to jump in, you know. Without the candlesticks, you're not gonna have the timing. Without the structure, you're not gonna have direction. So you're gonna be lost. You're gonna be buying the market, it's gonna come down. You're gonna sell the market, and it's gonna go up. And then you're gonna buy it again, and then it's gonna come down. And you're gonna be like, what the hell? Who's watching me take these trades? Moving the market in the opposite direction, right? So market structure for direction, candlesticks for your timing. And this market isn't going nowhere. What is going on? We're getting a second push. No, actually, this is like the fourth push from the 50-minute opening range high. We have a bit of a flag forming here. Something like that. Or it could be a flag like this. A bull flag. So the way that you would trade bull flags is you would have to take your, you would want to see, for one, you want to see a spike in volume as it's breaking out. You want to see a spike in volume, and then you want to have your stop below this last two or three candles or so, somewhere down here. And you could give it a little bit more room if you want, but you can have it somewhere down here, and then you can do a 1-1, 1-2, something like that. How do you feel about XRP and crypto? In the long term, it's a great investment in my opinion. Because the way that the economy is, and with the dollar, people are saying that the dollar is gonna fall, and we're gonna lean towards crypto. So if that does happen, which is already kind of happening, there's already places that are taking crypto as payment. Then that would make an amazing investment, because you would, crypto, if it does become official, crypto will blow up. Literally everybody who's got crypto will be rich. So as long as they invested enough money in it. But yeah, I think is long term is a great way to invest in. Of course, just invest what the money you can potentially lose, because we never know, right? Nobody can promise you that it's gonna blow up, but we can think positively and hope for the best, and invest some money that you're willing to lose just in case, to be safe. And yeah, I think it's definitely gonna work out for sure. Everything's going digital. Yeah, not financial advice. That's right. That's right. How do you guys feel about this bull flag right here? I think this is giving like it's gonna fail type shit. Feels like it's gonna fail. Yes, it's moving sideways. Yes, sir. Sideways squeezing. Yeah, definitely not the best time. The market doesn't look very confident about this move up. It's making it, it's doing it, but it's just not doing it in a very confident way. Like to see here if we get a spike in volume right here. Push up above these highs. You might be able to scalp this quick. I wouldn't stay there too long though, because I just don't like how the market's playing out today. It just looks, no, it's like uncertain. It's like uncertain, man. Let's see it up. Okay. All right, got about, let's stay here until 11 a.m. If you got any more questions, yo, let's crank them out of the way. Market's chopping, it's moving very slow. And at least answering those questions for you will not only help you, but it will keep me awake. Hold into the afternoon, okay. Wanted to go higher than trusted, yeah. Yeah, it looks like as if it should be going higher, but it's just dragging. It's just so slow. This is another reason why it's good to be able to take the trade and just put your stop orders and your limit orders and just leave it. Because when you sit here for a long time, you tend to lose patience and then you make dumb decisions. When you're on a call and you see you down, do you panic or sell or just hold, see if it goes back up? It depends. It all depends. I want to learn. Yeah, for sure. Yeah, I got you. If you guys need help with the futures. So I'll give you a scenario. Let's see if we can find. I'll leave the cues up here. Let's go on this one. And let's find a scenario where maybe I would have taken a buy and then I would have had to maybe reconsider. So you kind of want to determine first. You have to know: are you trading with the trend, or are you trading against the trend? We get that breakout of this bull flag for no volume, so just be aware. Just want to call that out real quick. All right, so if you're trading with the trend, right, and let's say this trend is strong, right? It's got momentum, it's got volume, got a lot of green candles, a lot of buying, then okay, great. Then in this case, like I said before, you can use the 21 EMA to help you determine. Like let's say I bought here, right? Let's say I'm like, okay, for some reason I think this market's gonna go up, and then you get boom, you get this big bullish candle, right? And you're like, oh, perfect. That's my entry, right? If you happen to take this buy, this is again with the direction of the trend, and we're in an uptrend, then right, let's say you take your buy, you're like, great, all right, I set it up, I got my stop in place, I got my take profit in place, everything's good to go, and then the next candle is red, and you're like, oh shit, it's not looking too good, right? And it keeps going low, and you're like, oh shit, I'm gonna get stopped out, right? By the time it gets here, you're gonna be stressing out about it, or you might be like going over in your head, oh shit, am I gonna lose? Like, should I close it? Should I hang on? Right? So at this point, this is where having rules is important, right? If you're trending with the trend, have a rule, right? So you can have a rule that, okay, if I'm trading with the trend, as long as price stays above the 21 moving average, which is this purple line right here, then you can still hold on to the trade, right? Because what happens is, if price doesn't, like right here, it breaks it, but it still didn't close below, it still didn't get below this candle low right here before this is the entry candle right here. This is your entry candle right here. That's the low of that candle. I would put the stop loss at least a couple pips away. So then, as long as we're somewhat holding above this 21 EMA, you can still continue to hold the trade. And then when it comes back to it, right, let's say you didn't sell here yet, even though you were in profit, you still held. If we continue to hold above it, you can continue to hold that trade. When that trade cracks, when that moving average cracks, that's when you want to be looking to exit. In this case, it crossed a little bit below and it bounced back up. So you kind of want to pay attention to how that candlestick is behaving when it's near the 21. Because if you do take a buy, let's say, let me find another spot here. Let's say you take a buy right here. Take a buy at this bullish candle right here. And let's say your stop is below the candlestick and below the 21 EMA. And then you get this happen. Boom. Price closes below your support and below the EMA. This right here, you could close it. You could close your trade here. Even though it ends up pushing, right? You need to operate based on your rule. And your rule is to close it when you said that you were going to close it. So you have to follow your instinct and your rules and the way you trade. So in this case, you would have taken a loss here. Even if it played out, you take your loss. Take it like a man. I know it's hard to close that trade when you're at a loss, man. I've been there. You want to hold it and hope for the best, and it's like the times that you hold it and it doesn't end up playing out, oh man, does that hurt? That stinks. You lose a lot of money. So it all depends on your rule, the way you trade. Let's see. Depends. This time we held. Yeah, there's times that we held trades. But that's because there was still signs that it could still play out. Right? There were still signs like, for instance, this trade today. Right? This trade today. The first thing I noticed, by the time this candle formed right here, the first thing I pointed out was this fair value gap right here. Right? And what I said was, okay, we could see a pullback. There's a chance, I don't know, but there's a chance if we get a pullback to this fair value gap, I said price will go up. So you could take a buy here. Well, then I said, I also don't feel too good about this setup because, I don't know, I'm just looking at the price and I'm just like, it just doesn't look as strong as I, feel like it should be for me to take the trade. So it doesn't hurt not to take a trade, but at least knowing the direction, which we were right on, is okay. We had this fair value gap here. We pushed up very strongly from the previous day close, and I say if we pull back to this fair value gap, we might get a 1 or 2 risk reward. So we might get double what we risk on this trade if you take it, right? And then what happens? Price pushes up, and then it starts to look like it's gonna fail. It didn't quite get to or take profit, but it looks like it's gonna fail and it's gonna go down, right? So this is where, like I was saying, like you either have a hard stop, right? Our stop is down here, or you hold as long as we stay above the 21 moving average, what it did, and then you would take your profit right here. This would have been a winning trade. This was a winning trade right here. But we held because even though it struggled to go higher right here, it was getting choppy, right? It took so long to go, but we follow a rule. What was the rule? Well, if we stay above the 21, if we don't break support, right, then we can still hang on to this trade in hopes it gets to our take profit. Okay, so I hope that kind of cleared it up. Because just because you see a red candle, like let's say you buy the market and you see a red candle, that doesn't mean immediately close the trade. You're gonna see red candle. The market's gonna show you red candles when it's going up, and it's gonna show you red candles when it's going down, and it's gonna show you red candles when it's going sideways. But in most cases, it's gonna show you less red candles when it's going up, and it's doing it in a strong manner. So yeah, we saw some red candles here, but what happened? We didn't break support. Right? There's a support right here. And if you don't see it, you put this line chart, right? You put this line chart, and every time price makes like this little corner right here at the bottom, that's support. That's support. Okay? So if you're looking at candlesticks and it's tough for you to see where support is, then you change the candles to a line chart. And you go here, and then you go line, and now you can see where there's support. There's support here. There's support here. There's support right here. Okay? So price is going up and it hasn't broken support. Therefore, you should have never had any thoughts about closing that trade until it hit your take profit. So right there, boom, you can close your trade. That's 1 or 2. That's a winning trade. One and done. There's times, yeah, well, there's been times, yeah, we lost a lot. So it's tough having that perfect balance where you exit the trade at the perfect time, whether it's winning or it's losing. So you have to kind of trade for a while, and you have to come up with your own rules, or you can copy somebody else's rule, right? You can ask someone, you can watch someone trade and be like, all right, I see that this guy, the way he trades is he holds it until this happens. Once this happens, he closes the trade. So you can copy it, or you can come up with your own way of kind of managing the trade. But yeah, there's gonna be times while you're going through this learning phase, you're going to lose money, guaranteed. I guarantee you might be winning, you might be making money right now, but you're gonna take some. There's gonna be some big losses, right? That you're gonna take, because there's gonna be times where either your emotion was off, and maybe you were too overconfident and you went way too big, and then it didn't play out, and you ended up blowing your account. That's gonna happen. That's just like a regular day for for trading. At least while you're learning, like you're gonna f the whole thing up. But what you want to do is when you have those big losses that you kind of like, you know, it's gonna tear you down, right? You're gonna feel like shit, dude. I promise you. When it comes to money, there's nothing but emotion coming out. um, so yeah, you're gonna have some losses, you're gonna have some letdowns, but what is key that you do during that time is that you either screenshot where the mistake happened or where the shit went wrong, and try to analyze what happened there so that you can use that as knowledge for the next time that that setup comes up. Because trading is so repetitive, we repeat the same entries and the same exits oftentimes, right? For instance, this bullish, right, this bull flag, I said, okay, price breaks out, I want to see a spike in volume, and then you can go long, and then you want to put your stop below this low right here. This right here, I've done this millions of times for the past 3 years. I've been trading for over 3 years, and I've done this so much that it's just like second nature. I don't have to think no more where I'm gonna put my stop. I just know where to put it because I just done it so many times. Okay? So it's a lot of repetition and kind of just learning from when you do fuck it up. You have to you have to learn from it. There it is. We made it to that supply zone. I would be looking to exit that trade here, up here somewhere. So now for the timing, right? Now we have our zone where we know there's likely to be sellers. So now we listen to the candlesticks to know when it's time to now exit. Or you can just close it, right? So I would go to a lower time frame and I would look at the candlesticks, right? We're still going up. So you can grab essentially your stop loss. Excuse me. You can grab your stop loss and then you can drag it and follow along price so that when price turns down, it can stop you out. It can close your trade for you. I know you can't do this in options, but you can do this in future. You can grab your stop and literally just by the click of a mouse, you can move your stop higher. Right? And you can just trail it now. You can just trail your stop so that you try to get, if it's for some reason just jumps, right? If for some reason it jumps, with has done it before, then you can continue to follow your stop as price moves higher. Once that thing comes back and it hits your stop, boom, you take your profit. But we are in that bearish fair value gap here, that bearish order block. This is the order block, right? The order block. Jeez, I'm giving a whole class here. The order block is the last green candle. It's the last bullish candle. In this case, I changed my candle color, so don't look for green. It's the last bullish candlestick before a huge drastic move down. So that makes this a supply zone for sellers, where sellers might be looking to sell again. So you could be looking for shorts up here. That's a possibility. But of course, you would want to see, for one, you would want to see a change in structure or a change in character, which means that if the market's trending up, you want to see a lower high, a break of support. You want to see a break of support, and then you want to see a lower high, and then you would go short right here, stop maybe somewhere up here, and then you can try to get some shorts there. But you have your zone. Now you need to wait for structure, and then you need to wait for your candlestick for the timing. You need to wait for your candlestick, and then you boom, that's your entry. Or what you could do is, some people just take their entry inside the zone. They don't wait for confirmation. They don't wait for market structure. They don't wait for practically anything else. They just trade the levels, right? They trade the zone. So one price gets close to their area, they just take the short, boom, and then they put their stop above here, target a 1-to-1 or something like that. But me, I don't like picking tops, because this market can just keep going up. It can just keep going up, right? So if I take a short here, how would you feel if this just keeps going up, and then maybe you could have just held that buy position that you had back here from this bull flag, right? What's up? Catch up here in the comments. I just closed 2 contracts that are lost. Oh no! No, you took some puts? Shit. Alright, let's see. Talking about me, I've been suffering all my lost it. Oh no. Oh no, not Lenny. Yo, nah man, yo, I was calling it out, man. Come on, bro. You got that bull flag. Bull flag. This was the first entry right here. Right? Tapping into that fair value gap. And then this bull flag could have been an opportunity to add more. This bull flag breakout. But hey, we learn, man. We learn. We have to make mistakes in order to get this right. There's no way you'll learn trading without completely jacking your whole account up. Like, you gotta fuck it all up, like, for real. I'm dead ass serious. You're not gonna be a profitable trader without messing up. So don't let that discourage you. I'm up 5%. Hey, that's something. That is something, bro. Add another 5 tomorrow and another 5 the next day. And believe it or not, if you just keep that up, man, you be rich for real. I'm done with this chopper market. Yeah, going to get a sub. Gonna get a sub. This guy. Yeah, this market was just very slow, man. It was moving, but it was just very, very slow. It was very slow. But we had nothing but those signs that are telling us market wants to go up, right? We're still above this 21 EMA. Right? We're still above this trend line. So looking back at this trend. Okay. First, is the market trending? Or is the market ranging? Right? Look at the direction of this price. Okay, so the market is trending. So we have our direction, but we don't just want to buy it blindly, which is why we use the 15-minute range to, as part of a system to kind of guide us with the direction of the market. And confirming that, okay, yeah, we are going higher. We managed to close above, or we managed to hold the high of it. So then after that, now you just kind of look at structure, and let's see, let me go back down to the 5. So we have our support right here. You mark your support. So you could say, all right, if this market is bearish, or if we're gonna go down, then you would want to see this support break. You want to see a break of support, and then you don't want to. I don't like buying when I don't like getting in when this market is selling off and it's breaking this trend line. You know why? Because oftentimes when it does this, when it breaks the trend line, it pulls back, and then it goes down. this is why I even if it breaks this trend line, this market can still recover and go higher. So I would first want to see this break of support, and I would look for this pullback, and I would want to see a lower high here to indicate, okay, now we're trending down. That's kind of like what I would wait for. Kind of want to wait for that to happen first. And we've seen sellers here at supply, so which we was already expecting that. Right? So this is where you would close your buy position. If you bought this bull flag, or if you bought the tap into that fair value gap here, or you bought this bull flag up here, that's it. You would take your profit. That's gotta be at least 15, 20, 30%, something like that. All right, you out, Ness? For sure, man. You're welcome, brother. Take it easy, man. I'll see you online later. All right, it's about to be 10 past 11, guys. I think it's a good time to call it. Market reached that destination that we had here for those buys. And yeah, this is likely to come down. So if you're still on those buys, just just be aware, just manage, keep that risk tight, the stop loss tight. And hopefully you guys learned something today. Thank you guys for joining. I appreciate if you all give it a like, and I'll see you guys later. Peace.